Tesla has interest in acquiring a lithium company. We've also got a few price changes from Tesla, some news on China, and a few other items as well. Looking at the stock, Tesla, nice day today, up 3.1%, closing at $208.31. Also continuing to rise in the after-hours session, while the Nasdaq was down 0.6% on the day. So I think yesterday we had the underperformance, getting back some of that on the day today, which is nice to see to close out the week. All right, getting into this lithium company news, this is reported by Bloomberg today, after hours. They are saying that Tesla has been weighing a takeover of battery metals miner Sigma Lithium Corp. People with knowledge of the matter said, amid rampant demand for the metal used in electric vehicle batteries, the EV maker run by Elon Musk has been speaking with potential advisors about a bid, and they say that Sigma Lithium is one of multiple mining options Tesla is exploring as they consider their own mining, or their own refining rather. So the report here, as they say, they're speaking with potential advisors, considering multiple options. So this has caused a really big spike in Sigma after hours. Sigma is a roughly 4 billion Canadian dollar market cap, as we can see here. With this big spike after hours, that would put it up to the US dollar equivalent would be around 4 billion as well. Starts out at 3 billion and rising to 4 after hours with this jump. So it would be a pretty significant acquisition, and this would have to be, presumably a premium on top of this, unless the deal was in the later stages and kind of already locked in before this rumor came out. But from what it sounds like from the reporting, that is not the case. They say deliberations are in the early stages, may not lead to a transaction. High price expectations by the owners, people said. So they do note that the biggest investor in this company, in Sigma, holds 46% of the company. So when you have such a significant stake from one person or one entity, that can make an acquisition more difficult because you're not trying to, your offer, when it would normally be spread a lot among a lot of smaller entities that may have different opinions. When you have one investor that holds such a significant portion, they're obviously going to be responsible for most of the vote on that, which can make an acquisition even more difficult. So again, very early stages it sounds like here. I'm sure Tesla is considering all options in the lithium space, as we have heard from Elon Musk's comments on the earnings call. That seems pretty obvious. So for them to be interested in one of these companies, I think makes sense and probably isn't really too significant of news in the grand scheme of things, despite the huge increase in the price of this company after hours today. So with that being said, nevertheless, let's just take a look at kind of, some of the information about this company. As I said, it's a lithium mining company. They are not actually in production on their mine yet, but they plan to be pretty close. They expect to sort of launch phase 1 of their mining operation this year. I believe this would be in Brazil, if I remember correctly. And you can see their plans here in terms of their production output. They expect 270 kilotons per year, KTPA, in this first phase, which would be 2023 through the middle of next year. And then they expect to roughly triple that in 2024. And then they just have future here. So they have that jumping in 2024. I don't know if that would be their expected time frame to hit the full capacity on those second and third phases. But in terms of the actual output of this mine, obviously those don't mean a whole lot to us, but LCE here would be lithium carbonate equivalent. So just doing some rough math on that, benchmark equivalent or benchmark minerals estimates that there's roughly 715 grams per kilowatt hour of lithium carbonate equivalent in lithium ion batteries. Obviously depends on the chemistry, depends on the type, all of those good things. But if we use that estimate, this could put the annual production in terms of the lithium carbonate equivalent that they are mining, not necessarily refining, but mining, that could be enough for, let's see, 104 billion grams per year. That's what this converts over into. And that would be enough at that rate estimated by Benchmark Minerals for 145 million kilowatt hours or 145 gigawatt hours. So that would be enough for approximately 2.5 million 60 kilowatt hour packs. Again, a lot of estimates built into that, so the number would vary, but that would be sort of the mining equivalent or the mining production that we would be talking about from, let's say, 2025 and forward. But again, that's a heavy forecast based on where this company is at today. And again, the market cap, probably talking about at least a $5 billion acquisition in this case. So you can see here also they talk about their market cap. Bloomberg mentioned that the that might be a little bit prohibitive in terms of the owners expecting high price expectations. And we can even see that in their investor documents here. They note sort of the disconnect in market cap, as they put it in their investor deck here, between Sigma and some of the other mining companies that are publicly traded as well. So we can see where they're at from some of those perspectives, and then also relative to other producers that are in operations right now. Kind of gives you a sense of the volume that this company is, again, aiming for. So have to take it with a grain of salt at this point, but it is definitely interesting. And if these talks are happening, then, you know, it could give us a little bit more sense of where Tesla is at in that process. And maybe we hear a little bit more about Tesla's plans, like a lot of the topics we've been talking about lately, in a couple weeks at Investor Day. So I'm not putting a whole lot of weight into this. You know, I'm not going out and buying Sigma stock after hours or anything, because it does sound like this would just be one of many possible options that Tesla is pursuing or considering. All right, moving on, we've got a couple updates from Wuwa on Tesla's Gigafactory in Shanghai. So interesting today, Wuwa on his video saying that according to Tesla's planning in mid-February, the Shanghai factory will end overseas deliveries this quarter and turn to production mainly for the Chinese market. But we learned through the news that before the end of February, the Shanghai factory will, of course, carry out the production line upgrades in batches to prepare for the new Model 3, which is understood to be supplied to the Chinese market in the third quarter. So on the first piece of this is pretty interesting. If Tesla is, you know, I think we've seen a record number of boats so far in this first quarter relative to any other quarter, and in terms of the exported vehicles. So it wouldn't be too surprising to see them switch over, but it would suggest a little bit more of a switch back to that delivery wave, which Tesla in the third and fourth quarter talked a lot about sort of getting away from. So this would be a little bit surprising, but if this does happen, it would also indicate that the insured vehicle numbers that we've been talking about these first couple of weeks have not really meant a whole lot in terms of where the market is right now in terms of the order rate. So it'll be interesting to see if this happens. And then on the upgrade piece of this with the Model 3, we've talked about those rumors, but he says it's understood that this would be supplied to the Chinese market in the third quarter. I think this is basically just the old information or the old rumor that we'd had maybe a month ago or so. So I wouldn't necessarily put much weight in that. I don't think this is Wuwa communicating any new information. I think he's just saying, hey, this is what the old rumor was. But that was before we had this sort of timeline on the production downtime. So I wouldn't read too much into that piece of it. He also gave us a little bit more context on this in the video description of his video yesterday, saying that they got information that the Shanghai factory will be upgraded in batches by then February. So basically the same thing there. But it means that the production line of Model 3 will not be a complete shutdown and transformation. This time the upgrade is different from the past, simply to improve production capacity. So it's a little bit confusing, especially that last part about improving production capacity, as we suspect that this is a changeover for sort of a newer version or an updated version of the Model 3, rather than like shutdowns we have seen in the past where it is for production capacity upgrades. So I don't know if that's just a translation thing or what's going on there, but it sounds like Wuwa's expectation from sort of both of these comments is that, you know, well, now that I'm reading this, he does say by the end of February, so it's a little bit confusing, but it kind of sounds like he expects it to be a little bit more of a drawn out process. So we'll have to see on that. Maybe we still have some Model 3 production in the meantime, which will obviously affect the production and delivery estimates for the first quarter. We also have price increases in China and a couple of other markets, like we had seen previously on the standard range or rear-wheel drive Model Y. The price increased by 2,000 RMB on that version. I think that was about a week ago. We now have the exact same price increase for the other trims for the long range and the performance Model Y in China, both increasing by 2,000 RMB, which is a little bit less than $300. So no changes on the Model Y, but good to see that for the no changes on the Model 3, but good to see that for the Model Y. And then we also have similar increase in Australia. This one though, actually both increases for the Model 3, the long range version, and the performance Model Y, kind of like we have seen in the United States. Both of those increasing by $400 Australian, which is I think $275 US. And then slightly larger increases in South Korea. This was shared on Twitter. I think these numbers are pretty accurate. There's been some debate about what the actual price increase was, but I believe these are the most accurate. They've got this price listed here for the performance Model Y, which I was able to check against an article about the previous price cuts that matches there. And then the new price that that they've got here listed also matches the South Korea design studio. So I think these are correct, but we can see that this is about an $1,800 price increase on the Performance Model Y and about a $700 price increase on the long range there in South Korea. And then they also increased the order deposit fee, pretty significant. I'm not sure why so heavy there relative to other markets, but looks like it's gone from $770 previously now to $2,300 there in South Korea. So again, continuing to see price increases in various markets. We've also got an update on Tesla's pending plans in Mexico, I guess we should say. Seems like we get an update on this from the Mexican government pretty much every week now, but Mexico's foreign minister again commenting on this, saying that, we quote, "Very soon we will have confirmation that this company, which is so important, which is very close to the electromobility priorities we are promoting, has chosen Mexico to increase its presence." So we'll see on that, but it sounds like Elon and Mexican president were supposed to speak sometime soon. That was what was disclosed today, so kind of an announcement of a phone call, but no time frame specifically for when that will happen. So I think Mexico feels like this is something that should have already been announced. It kind of sounds like, based on how many times they're commenting on this, but sounds like they're just waiting on Tesla to make it official. And with the number of comments we're seeing, they seem to be getting pretty antsy on that. So again, maybe another thing that we'll hear about at Investor Day. And then another thing we've kind of been waiting on is an update on the radar situation. So remember, this was supposed to be published after February 7th, and then it looked like that was maybe switched or delayed to March 7th. But those have finally been published today. Unfortunately, at least from me reviewing the documents, maybe we'll see more as more technically inclined people get a hold of these. But so far from what I've seen, not a whole lot that, at least I can take away from these. There are some photos and things of that nature that have now been published, but I don't have a lot of, insight from those things that have been shared with this release. So we'll see. They're not loading here right now. Oh, there we go. So you can see some of the photos of the new radar. Again, doesn't mean a whole lot to me, but this would be the new high definition radar. I think if we had not actually seen that request for delaying the publication of this information, this probably would have received a lot less attention, sort of the Streisand effect in action there. But again, hopefully we'll get some more information as people have a chance to review that. And then we've also got an update on a topic that we talked about yesterday. That was, of course, the response, or the claimed response, rather, to the unionization efforts. So I shared my thoughts on that, and then as I was doing that, as I was recording, Tesla published a blog post addressing those claims about termination in response to the unionization efforts, giving a lot of helpful information. So they say Tesla conducts performance review cycles every 6 months. The review process takes place globally, so not just at Giga New York. And then they give a little bit of a timeline here. They say on December 13th, managers across the company received communication regarding that schedule, which included the information that the exits for low performers would start the week of February 12th, 2023, which is, of course, this week. So this information was out there, again, just shared with managers, but sometimes that information can trickle down, especially as it sounds like this is part of the review process where some of this information would be communicated, where people are saying, hey, low performer, but you've got this amount of time to improve your performance. So given the knowledge of this timeline, it would be very easy for a unionization effort to target this week for that type of an announcement, knowing this review cycle. So they give some context, confirming that was about 4% of the employees on the autopilot labeling team that were fired. They say that the employees that were let go as part of the process received that feedback prior to received the feedback on their poor performance prior to the dismissals here. And they say despite the feedback, they did not demonstrate significant improvement. And the impacted employees were identified on February 3rd, well before the union campaign was announced. They became aware of the union organization activities approximately 10 days later. So if that timeline is accurate, that would mean that the dismissals were not associated with that organization activity. They say that they learned that in hindsight. One of the 27 employees was identified as part of the union campaign. So this is a very different story from the coverage and the reporting that we had heard yesterday. So, I think it supports a lot of my comments about being careful before we jump to conclusions. I'm sure the union would have a different story about this too, but I think this information with a lot of evidence provided by Tesla is pretty supportive of their point. And then in regard to the team as a whole, they do say that over the last 6 months, this department, the auto label The labeling team has grown significantly, 54% just in that period of time, from 437 employees to 675 as of the beginning of this week, prior to these layoffs. But again, that's only 4%. So 54% growth, 4% being fired. Again, that's probably pretty standard process, if not even less significant cuts than might be expected during a period of growth like this. So, and kudos to Tesla for sharing that information. I think that's very helpful. And, a little bit of the public relations that a lot of people have been asking for a long time. Last couple of things here. We've got an update on Tesla Energy in the UK. So we've talked plenty of times about Tesla's partnership with Octopus Energy for that energy plan. It sounds like, according to a tweet that somebody shared with me here on Twitter, that Tesla has now made the decision to end this partnership. This is an email from Octopus Energy saying Tesla has decided to retire the Tesla Energy plan from the UK. I think Tesla had partnered with them in one other market as well, but haven't seen anything on that, and I can't remember which market that was, so probably need to do a little bit more research. But it's interesting. We'll see if Tesla plans to offer a similar energy plan without a partner, or if they've just sort of are starting to wind down this product. So probably need to do a little bit more research on that. We will see. And then the last couple of things, I think I've said that, but last couple of things, General Motors is planning their breakout year this year. So I saw this on Twitter, and I thought Bloomberg kind of did General Motors a little bit harsh here, but they say General Motors Chief Executive Mary Barra is saying, this is the year that GM moves past its traditional rivals and starts its attempt to close the gap on Tesla in the electric vehicle race. And when I saw that on Twitter, I had to laugh at it because it's kind of funny that, yeah, this is the year that we're starting to attempt to compete or close the gap on Tesla, which is a pretty low bar, I think, to start the attempt to close a gap. But it's not exactly what Mary Barra had said. She said, quote, "This is our breakout year. I know this is our breakout year because of the products we have and the demand we have seen," end quote. So it's a little bit different than how Bloomberg phrased it. But, with the level of electric vehicle deliveries that GM had in 2022, even if they make modest progress this year, it will show up as sort of a breakout year from where the base would have been set from 2022. So we'll see. Obviously, they have a lot of different vehicles that they plan to launch over the next 12 months. And then finally, just wrapping up, looking ahead to next week. On Monday, we will have President's Day, so the markets will be closed on Monday, unless there's anything crazy. Probably no episode of Tesla Daily either. On Wednesday, we'll get the FOMC meeting minutes from early February. Those might be interesting, as Powell kind of alluded to in his comments, that, wait for the minutes to see if we talked about potentially not doing a rate increase. Although since then we've gotten, higher than expected CPI and PPI data, so probably not all that relevant in terms of those comments. And then on Friday, we'll get the personal consumption expenditures, or PCE, report. Also, just a comment today from the Fed. So the Richmond Federal Reserve President, Thomas Barkin, made some comments similar to what we had talked about yesterday from other members of the FOMC, saying that the recent data he's not taking too much signal from, would want to see, or would rather wait to see if there's multiple months of similar data in terms of the increases that we have talked about. And then he said that he does like the quarter point or 25 basis point increase path because it gives more flexibility to respond, but that the frequency of those updates would be consistently happening. So just kind of a different narrative from what we heard from the other two members. Barkin, though, is also not a voting member on the committee. And then just a little bit more macro data. We had talked with the CPI report about how used vehicle prices had continued to decline pretty significantly in January. We've got data now from Cox Automotive that wholesale prices for used vehicles have increased sharply to begin February, 4.1% in these first 15 days from where they were at in January. So the largest increase in February since 2009. So quite a reversal there. We'll see if that, carries throughout the rest of the month, but that could lead to, further increases in the CPI month over month next month. So we'll see on that, but that'll wrap it up for today. So as always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can find me on Twitter at Tesla Podcast, and we'll see you probably on Tuesday for what I believe would be the 22nd of February, 21st episode, February 21st episode of Tesla Daily. Thank you.